Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, a little bit about what we do at Brokers Express as independent reps. I want to show you a couple things on the website, if I can get another couple minutes, if that's okay with Steve.
Absolutely, Mike.
Okay, very good. We do managed trading and investing, so if you're looking for someone to manage your portfolio, we offer that service for long-term investing. We believe in options in the long-term portfolio. Now, does that mean you should go out and buy 1 million call options on QQQ and look to double your money tomorrow for all of your entire nest egg? Good gosh, no. I wouldn't recommend that to anybody. But we do recommend options as a form of hedging for the long-term portfolio. We also do managed trading. We have things going on right now with the Aussie dollar, with the New Zealand dollar, with the loonie, and just a couple things that we'll talk about a little bit more in a moment. So if you're looking for someone to trade your short-term portfolio, we do that. We also do self-directed brokerage with an added value. The Brokers Express platform, it's identical to the Options Express platform because Options Express owns it and powers it. But through us, what you'll actually get is the ability to call us and ask specific opinions. What do you think of XYZ stock today? What do you think of the euro today? We'll be able to give you our advice and that type of thing. And we also offer business hedging. If you're a business to where you do import-exports and you're concerned with the value of other currencies, we're happy to help you hedge your business place. This is our information. If you're interested in learning a little bit more about our services, that's my email address, mtosaw@brokersexpress.com. That's the phone number, 866-903-1822. Feel free to give us a call at any time. And with that, what I want to do right now is bring up the Brokers Express website. And I just want to show you a couple of things that we're looking at right now in terms of the currency plays. Now, the first thing that I want to do, we're actually staying out of the euro right now, and I want to just show you the ways with which you can do a straddle on the euro. And the reason that I'm using the euro is because it's one that I know we're not in right now, and we're not doing anything on. Actually, you know what? Let's do the yen. We're not on the yen either. It's actually interesting, just as a side note, Steve, with the new prime minister in there, he actually wants to lower rates in Japan. That's kind of a interesting thing that's going on.
You keep buying more and more bonds. That's just another way to lower rates. It's a form of easing. I'm sure they're doing that too.
Yeah. All right. So
the yen's not weakening. That's interesting, though, right, Mike? Yen is not weakened, really.
It's something else. This is just a crazy time we're in.
Absolutely.
So let's say that we're neutral on the yen. We're going to buy the 91 call and the 91 put. Now, YUK is dollar-based. So with that being said, let's say that we're just not, if we were bullish on the yen, that would mean that we would buy puts on YUK because that means we're bullish on the yen versus the dollar. If we're bullish on the dollar, we're buying calls on YUK. This is set up that way with the yen. And then with the other currencies, with AUM and NDO, we'll adjust that accordingly. But what I want to show you is the risk-reward for this specific trade. And I'm just going to randomly buy one. Disregard the commission costs on here. This is just a random sampling of it. But you can see on here what we're paying for it. This is the equivalent, like let's say you could buy YUK as an underlying. You're not able to, but let's say that you could buy it. It would actually be worth $9,147. That's the value of buying 100 shares of it, so to speak. So if you're viewing this kind of as a stock, that's the way with which to view YUK. And to buy the July straddle on it, the 91 call and the 91 put, the cost is going to be $257. So you can see that if YUK stays right at $91, this is your enemy, non-movement. In order to actually make money on the straddle, the long straddle that is, you need to have it go beyond 88.43 where you'll start making money, or beyond 93.57 for you to start making money. This is your loss range down here. Now, we had a question during the event, can you differentiate the risk-reward differences between the straddle versus the strangle? Well, right now, let's make a mental note, and remember 88.43 and 93.57 is the two break-even points of it with it. So we'll just say 88.50 and 93.50. Now, with that, let's go ahead and buy the 93 call and the 88 put, and let's recalculate this to kind of show you the difference. So 88.50 and 93.50, you can see here it's actually a wider break-even point. Now, because of the fact that this is actually a slightly bearish straddle and strangle, it's going to come out a little bit skewed in that because I was using the 91 call, and if it was exactly at 91, it would come out a little bit different. But you can see in here, it takes a longer distance of it going down to where you actually start to break even. And going up, it doesn't take too much longer of a distance, but once again, this is a slightly bearish strangle or straddle because of the fact that it's at 91.50 or 91.46 and not right at 91. Now, on that, the difference is that it's only $92 of overall risk on this. As we showed earlier, we had a greater risk when we were doing the long straddle, so we need to be aware of the fact that we actually have a lesser likelihood of actually making money. So that's probably one of the main differences between the straddle and the strangle. Now, a couple of things with which we're looking at right now on the short-term trading side of it. So I'll bring up a couple of charts here. And first and foremost, this is not, I repeat, this is not a recommendation by any means, but these are, I personally don't have anyone specifically in these, but this is what I'm looking at right now from a technical standpoint. Let's start out with AUM. AUM is the ISE's Aussie dollar, and this is the one that actually tracks the, this is what tracks the Aussie dollar. So if you're bullish on the Aussie dollar, you would buy calls on this. If you're bearish on the Aussie dollar, you would buy puts. What's interesting about this is that this is actually starting to form a double bottom from the standpoint of the chart patterns. And what happened in Australia recently, there was talk about a mining tax that was going to just really kill everything. And this is probably around this area to where the mining tax was brought up. But now there's talk about it going away, and that's something to where potentially that could be a bullish benefit for the Aussie dollar. Now, whether that's going to happen or not, who knows? The other thing that I find interesting about the Aussie dollar, they've actually raised rates. And we're in an economy right now to where raising rates is kind of a scary thing for a lot of things. So with that, we're definitely watching the Aussie dollar. I don't have personally any current clients in it as of yet, but it's something that's definitely on the watch list. Another one with which we're looking at, New Zealand, NDO. NDO is a very similar currency, similar chart, similar things. Don't know if it's still something with which we're going to continue to pursue quite as much as the Aussie dollar, but it's definitely on the radar screen.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.